relations managers outperform other fundraisers 4-1. With us today is the founder and CEO of the Chestnut Advisory Group, Amanda Tepper. Chestnut specializes in helping asset management firms maximize returns on their sales and marketing. And Amanda has a long career in the industry. Before founding Chestnut, Amanda was Global Director of AllianceBernstein's Senior Portfolio Management Team. She has a deep research background. Amanda was a member of the J.P. Morgan Institutional Investors All-America Research Team. She also served as Associate Director of Equity Research at Bank of America. She's coming to us today from Chestnut headquarters in Westport, Connecticut. Here at Navatar headquarters in downtown New York, we are joined by Navatar's Ketan Kankar. Ketan is a Deloitte consulting veteran who co-founded Navatar about a decade ago. Ketan is one of the leading experts on cloud financial services. He is responsible for Navatar's products and services that are now used by more than 500 financial firms in more than 30 countries. And during today's session, Ketan will show you how technology can put in practice some of the guidance we're going to hear today based on Chestnut's research. I'm Alan Siegert of Navatar. Let's start with Amanda and what I want to call Chestnut's 4-1 research findings. Amanda?
Thanks, Alan, and thank you, everybody, for dialing in today. Our research that we're sharing today is all from our white paper, Your Performance Doesn't Really Matter. Now, that may sound controversial, but the data is very strong. The results we're seeing with our clients are bearing this out, and if you stop to think about it, you'll all have examples of this as well. So the current accepted wisdom across our industry is that if asset managers can simply deliver strong investment performance, capital will absolutely, positively flow their way. And our research has shown this is not the case. So what we did was we got data from a bunch of different categories of asset managers over an 8-year period from eVestment, and we compared the net capital flows over that period to performance over that period. And we looked at it every single quarter on a rolling 3-year basis. We focused on 3 years because we think on a 1, 3, 5, which institutional investors look at, 3 years is the one people focus on the most. And what we found is that it really comes down to trust, and trust is something you can actually build and frankly will have more control over than your performance from quarter to quarter. And trusted asset managers do raise over 4 times more capital than top investment performers. They're also hired more quickly and they're retained longer. So turning to the next page, you can see that some asset managers are already taking this approach and really benefiting. And frankly, these are most of the largest asset managers. These folks, these companies have invested the most in their IR efforts over the last decade and generally are perceived as the most trusted by investors. There's been an amazing consolidation in our industry over the last decade. The top 10 global asset managers' market share has increased from 35 to over 50% now. And I'm sure you know, if you think about these names, this is not because any of them are putting in absolutely top quintile performance quarter after quarter. It is, however, because they have built up a real trust among institutional investors. It's the same thing on the hedge fund side. So the great news is that building a strong perception among investors is something anyone can do. If you want to play like the big boys, it's the #1 thing you should be thinking about really is building trust. And I just want to point out that in our research, it would be logical to assume that the largest asset managers would have a natural advantage in brand building and grow faster than the market, but our data shows that's not the case. So the biggest asset losers were much larger than the biggest asset winners. The fastest growers were much smaller than the largest players. So no matter how you slice it, the top asset gatherers grew by 164% over the period, more than 3 times faster than the investment performers, and they were not the largest players. So the fact that names, that becomes a self-fulfilling prophecy over time. On this page, we're talking about how the data worked. So in these quintiles, the top quintile of performers, which is the little bush you see on the lower left, raised $42 billion over the time period. However, the top quintile capital raisers, this is the 4-to-1, raised $175 billion over the period, and their performance was about average. It was actually 86 basis points lower on an annualized basis. So we were comparing trailing 3-year performance to next 12-month capital flow in this study. On the right here, you can see that the investment performance of the biggest net losers, this compares the bottom investment performers to the bottom net asset flow. So the green bars, the short green bars, were the lowest bottom quintile performers. And not surprisingly, of course, these folks did have outflows. Though interestingly, the lowest quintile of performers in global fixed income, which during this period was in a huge secular bull market, they had net inflows. However, the biggest asset losers actually lost not 4 but 8 times more assets than the worst performers. And our interpretation of this, and also based on our research among investors, is that to have trust and then lose that trust, you will absolutely be punished by investors. And again, it's not performance-based. So how do you become the big tree and not the little tree? That was the next piece of our research. And this is really Chestnut's operating thesis as we work with investors. To build trust comes from understanding, and you can build that trust only via a true investor education effort. So we call this the golden circle of asset management investor education. The outer ring, think of the outer ring as the what. What do you do as an asset manager? The middle ring is the how. How do you do what you do? How do you generate your alpha? What is your investment strategy? How do you implement it? But the inner is the why, and it's not why do you do what you do, it's why does it matter to any given investor who you're speaking with. So in our experience, over 90%, probably 95% of all asset managers are stuck at the outer ring, and most of the education that they do is all just about explaining what they do and showing their numbers, so what their numbers are. Explaining, getting people to really understand how you deliver that and how you operate and what makes you unique is tough. And there's a small amount of asset managers there, but we call the center the golden circle because that's what makes people want to invest with you when they understand what you can do for them, why what you are doing is going to solve some problem that they are having. So we've got a little more research to share with you, but at this point I'd like to hand it over to Kate.
Thank you, Amanda. And thanks everyone for joining the webinar. So the Chestnut research was very intriguing for us. It actually aligned pretty well with some of the things that we were hearing from our customers. So we have thousands of customers using Navatar to manage their investor relations processes, and some of the ones who have been very successful in raising money. A few kind of points that we were hearing from them. Number one was that every touch point that you have with your investors matters. And what that implied was that from a fundraising perspective, it is now a 24/7 process. You cannot be in fundraising mode only when you're launching a new fund, for example, because you are in constant touch and all these touch points matter. The investors, that was the second point that customers were telling us, investors have become more savvy. It's a very different landscape now than what it was 5 to 10 years back. And investors are expecting more transparency. They're expecting to understand you and your firm and your internal processes. And the third thing we heard was that re-ups also kind of are a great indicator of where your relationship stands with your existing investors. Right? So in today's session, what we thought was we could take a few examples and, building upon the framework that Amanda just presented on this slide, talk a little bit more and show you how, using technology, you could leverage some of these things. So starting with kind of the outer circle about understanding. And this, from a technology perspective, is all about building intelligence about your investors and then using that in your interactions. So I'll quickly show you kind of what we mean by that, how you can build an intelligent profile, how you can use external data sources, and how you can be more prepared for meetings that you have with your investors. So I'll switch screens and go into the Navatar system. And here's an example of an investor. Now, we highly recommend, and kind of that's what most of our customers are doing, is creating intelligence. And you can do that by building upon the kinds of things that each investor likes to invest in. So what types of funds, how much do they allocate? Depending on kind of your focus area, you can track how much they allocate on private equity or hedge funds or alternatives or real estate, and build this profile. This goes a long way in starting to kind of gain more understanding about your investors. And to augment this, use data sources. So again, all of you must be using some data sources. Here's an example of how you can use something like Preqin. It's integrated. You can see the latest research and data that Preqin has about this particular investor. And again, you can use it now to augment the research and your understanding of the investor. Keep track of other kind of external factors, advisors, for example. Very important to know if there is any consultant who is involved in the process. And then use all of this in the meetings and interactions that you're having with your investors. Prepare for that meeting. Now, we have a very simple example. You can use all this information, just click a button, and you can generate a quick profile about everything that matters to you about this investor. What this helps you with is being prepared for the meeting, having a conversation, and obviously based on those conversations, further going and updating your understanding about the investor. So that was kind of the first aspect, focused on building an understanding of your investors. And to Amanda's point, most of you, most of the asset managers are doing that today. Now we come to the next aspect, which is how do you build trust, right? So you have the intelligence, you have the knowledge, but how do you use that to build trust with your investors? And again, we'll use a couple of examples. And from a technology perspective, it's all about making sure that you're relevant in terms of what you're talking to the investor about, and that you are transparent about how your internal processes work and how what is your investment strategy. So let me quickly go over a couple of points there using the Navatar system. So about being relevant, it's important that you're reaching out to the right investors. So for example, if let's say you're launching a fund, you should not be just emailing or kind of sending a bulk email to everyone that you know. It should be to a targeted list of investors for whom this particular fund strategy matters. So you can do that within minutes. You can go and say, well, I want to reach out to all my investors who are interested in this particular strategy. And let's say this is kind of, you have a new fund, it's around mezzanine debt. So you could go in there, you can say, well, show me all my investors who have any interest in kind of investing in debt or bridge funds, or distressed debt. Right, so now you can intelligently go through the system and identify the right investors. Again, your touch points matter. So if you're reaching out to an investor about a strategy and they have, it's very obvious that they don't invest in that strategy, it's creating a negative perception about you. And all these things you can do within minutes, so it doesn't consume too much of your time. Similarly, a lot of investors are concerned about security. They want to be able to manage the security of documents, of information. They want to understand how you internally are managing everything. And it's equally important in this aspect that you are consistent with that. So if you're talking to an investor about how great your internal processes are, your internal measures are, you cannot afford to then email a PPM document to them. You should be watermarking them. You should be using some data rooms to be able to share that. So you can do all of that, and it's a pretty standard process now, and you can do that very quickly. You can watermark your documents. You can share them with your investors, and using a data room, you can actually get to see all of the feedback directly in here. So if you shared a specific document with an investor, you can just go into our system, be able to see if they have looked at a specific document. So if I look at a PPM, I can see that I've shared my PPM with my investors, and I can also get stats and see that it's been viewed 12 times already with details about when it was viewed. So again, this helps in bringing consistency to your process and making sure that all the things that you're talking about, you're also actually implementing within the firm. Similarly, feel free to share a report of your investment strategy. Produce a quick report about your deal pipeline, for example. You can manage all of that within Navatar, but then just a click of a button, you can have a deal pipeline tear sheet like this that you can share with your investors. Again, it helps them in understanding of your process, what your thinking is, how you are approaching your investment process. And then all this finally boils down to the main aspect, which is how do you get long-term investors? So you have intelligence, you've built the trust, but how do you make it a long-term play? And really the approach there is, again, building on the trust, but then institutionalizing the process. You do that by segmenting your investors, developing an outreach strategy, and then monitoring that process within using a tool like Navatar. And you can do that by using dashboards. So you could have segmentation strategies which indicate that you want to reach out to your top tier investors, let's say at least once a quarter, and your second tier investors at least once in 6 months. And dashboards and metrics like these allow you to monitor that, so you can track who you're reaching out to, make sure this is aligned with who your top investors are, and also using exceptions and flagging those exceptions. So in case you've missed out reaching out to any investors, having a quick and easy way to identify that so that you can correct your outreach and make sure that you're in constant touch with all your investors. So these were some examples to illustrate and highlight the Chestnut research and talk about implementation of some of those things using technologies like Navatar. I'll hand it back to Amanda for the next slide.
Thanks, Ketan. So we saw that interesting data on the asset flows and decided we wanted to talk to investors, which is something we actually do on an ongoing basis, real market research. And if you think about it for a minute, asset management is really one of the only industries left in the world where companies regularly launch what are intended to be multi-billion-dollar businesses without really doing much, if any, market research ahead of time. So we spoke to institutional investors to try to find out what does drive their decision to hire an asset manager. And as you can see here, first of all, you'll notice that nowhere in the top 5 is performance. We gave them a list of 12 different factors. Performance was in there. It just didn't rank. And number 1 is a strong understanding of the firm's investment process. And really, if you look down the list, you'll see that all of these are factors that you, the asset manager, have 100% control over, which is a good thing. You just have to put the time, thought, and effort into building and executing the strategy to address these issues. And then quantifying it is also important, because this is a new level of investment that, as Caton was alluding to, 10 years ago, 15 years ago, investors didn't need to understand what you did. But they do today, and that's an investment, but you get an incredible return on that investment. As you can see here, and this is again from the same research we did among investors, highly trusted asset managers are hired in about 5 months on average, whereas the typical asset manager takes almost a year. So that's a big ROI to get yourself in that highly trusted bucket. And you see similar numbers in terms of retention, and as Caton said, re-ups. That's the ultimate golden circle, where you want to be getting more and more of your capital from the same investors where you've really built a highly trusted relationship. So just a minute on Chestnut. We're a consulting firm. We work exclusively with asset managers. We do have a research arm called Institutional Investors Edge, where we're continually in the market doing research on all sorts of issues that matter for the sales and marketing teams at asset managers. We just did our own webinar a couple weeks ago, and we'd be happy to talk to any of you about that. That's a great support platform. For our custom clients, we are able to ask the right questions, because at Chestnut, all of us senior advisors have deep capital markets experience. So we're really expert at translating what are increasingly often extremely complicated investment processes into a message that will resonate with your target investors, and also helping you find your target investors. We work with many of our clients to help them focus on what matters and really serve as the third arm of their sales and marketing team on an ongoing basis. So with that, I will hand it back to Alan.
Thanks, Amanda. You told us a lot today about the strategy and tactics used by, I think your image is the big trees, the leaders in capital raising, and we enjoyed that. Caton showed you some examples of how to turn strategy into action with Navatar's Connected Growth Platform. We're getting a lot of great questions. You can enter your question over in the GoToWebinar control panel on the right side of your screen, including a real controversial question, I think, regarding placement agents. I'm going to hold that one to the end. Before we go to the questions, let's take a quick look at the platform. As you see on your screen, it's an investor relations solution built on the best technology, Salesforce and Box. Your IR strategy is embedded in the technology. It's driven by the processes. Another word you see on the graphic. We customize those processes to meet your needs. And regarding the next item, investor intelligence, we load third-party databases like Preqin so that you can easily reach out to potential investors. We also load your historical information about your interactions with investors and consultants, along with the relevant financial information that you need. And we show you how to easily capture your investor interactions from emails, calls, events, and meetings. And then finally, we set up and customize your management dashboards and reports so that you can easily track your progress and results. And there's also an integrated investor platform, as Caton mentioned, so that you can easily share information securely and confidentially. So there you have it, the Navatar Connected Growth Platform. So as I mentioned, we're getting a number of questions. The first one comes in from William, and I think I'm going to direct this to Amanda. Caton may want to chime in on this as well. He says, building a customer profile is a great effort. However, it is costly in terms of resources. For your clients who have developed such profiles, are they larger firms? How many people do they have assigned to this type of effort? Amanda, do you want to take the first crack at this?
Sure. The resources are always going to be limited, no matter how large your firm is, first of all. So we have clients that are very large and still feel that their resources are limited. So that said, before you're building the profiles individually, we think the most important step is to really think about and do some work on what are the attributes of your product or products that are really going to help investors, and then who are they? Trying to identify them. So it's not as large of an effort when you've really focused on a slice of the market. It's an incredibly inefficient market. It's a gigantic market, but nobody out there is able to build the profiles on everyone. And the second point I would just make is that all of these things, really what we're talking about is building a brand for yourself as a trusted, highly trusted asset manager. That's not something that anyone does overnight. All of this takes time. So if you have the right time horizon and you're able to focus on the market segment that's most relevant for you, it's not such an overwhelming process. So I hope that answers the broad approach that we have to your question, but there's no number, because every firm, there are firms of all shapes and sizes, and this is, of course, something that can be outsourced as well.
Okay, this customer profile question, it kind of also leads into another question that's asked by John, and I'll direct this to Caton about the profile and also John's question. There's been a lot of discussion about customizing Navatar's product to match the Chestnut recommendations. Is that expensive to do?
No, that is not. It is actually included as part of the Navatar service itself. So all of that is covered as part of the Navatar subscription. And also going back to the previous question on building profiles, from my experience, I think the most successful customers who are doing this, I don't think they have any dedicated people just focused on research. It's more kind of a philosophy that's ingrained across the firm, so that because we have a centralized profile now that everyone can access and view from any location, it's part of kind of anytime you're interacting, go back, update the profile, and make sure kind of any intelligence that you receive from your interaction with the investor reflects back on the profile, and that also kind of helps a lot in the process.
Okay, we have another question. This one comes from Cindy. Typically, how many IR fundraising dedicated professionals should an asset management firm have for 5 billion AUM, 10 billion AUM, or 20 billion AUM? Amanda?
If it was, I don't mean to duck the question, but if it was that easy, everyone would be doing it. I think it again depends on 5, 10, or 20 billion of what. If it's 20 billion of money market, you don't need that much, right? If it's 20 billion of several different really complicated products across multiple asset classes, you'll need a lot more. It also depends on your client base, how much hand-holding they need. As you grow, a couple of things that we see that help, and it's also, are you 5 going to 10, or are you 5 happy at 5 and you've capped out your capacity? So how much are you trying to grow versus retain? In general, as firms grow, we tend to recommend and see the more successful approach being where there is a group that is more dedicated to ongoing client service, education, retention, and upselling, and a separate group that is focused on bringing in new relationships. The issue that can happen when you only have salespeople focused on bringing in new money, and we hear this from a number of smaller funds, is they raise the same $1 billion over and over again. And you don't have the retention, you don't have the upselling. And they can be very different skill sets, and as you grow it can be very difficult to have one person playing both roles. So I hope that helps answer the question.
All right. My guess is that Cindy is at one of the private equity firms, probably in the PEI 300. So that would give you an idea of the asset size. Any other thoughts in particular for her?
I think the other thing I would say too is that it depends. You can be at 20 billion with not a lot of clients. So you certainly need to have enough people so that all of your clients are being served well, whatever level of service that that is for the fund or funds that you're in. You want to be able to, if you're aiming to be, top, world-class service, you want to have staffed yourself so that you can respond to breaking news on anything that's happening in the world that would impact your portfolio. And I know that's a shift for some private equity firms where you used to be able to raise and just give them a lagging update. That's not the case anymore. Our research shows that investors really expect their asset managers to be educating them on an ongoing basis, and when there is big moves in the marketplace, the first place they expect to hear from are their asset managers. So whatever that level of staffing means for your number of clients and the types of industries that you are investing in from a news flow perspective. And again, a lot of this can be outsourced, but you want to make sure that you're educating your clients. One last thing I would say is that when in doubt, if you're not sure if your clients are satisfied or not, we do and can help you do custom market research, because what will work for a competitor may be completely irrelevant for you, depending on what types of clients you have and what asset classes you're in. So that's another tool that you can use if you're looking to improve.
Okay. Thanks, Amanda. Caton, a couple of questions are I think, in your area. Bill writes that they have tried to implement a CRM in the past, but it took a long time and it was never used. How would we know that we wouldn't have the same problem with your service? And then there's a particular question Alex is asking, does the service integrate with third-party administrators so we can see investor data?
Yeah, so I mean the big difference, and I completely appreciate the question there, because we do see that quite a bit in the industry. The big difference is that you are getting a product that already has a lot of best practices and processes built in. So you're not starting from scratch, and you're not trying to figure out how to retrofit a generic system into kind of something that works for your industry. So what we see in our marketplace is it's usually a matter of weeks, not years, to get something up and running. In terms of the other question around data sources, yes, we do integrate. It's possible to get investor data. So if you're a hedge fund, for example, your data is with your administrator. You can inhale that and have it available within the Navatar product.
All right, thanks, Caton. Blair asks, how do you quantify trust? I think this is for you, Amanda. Are there specific, repeatable attributes that trusted managers have? What are the main factors that could lead to a loss of trust?
Okay, that's a great question. I just wanted to add something, though, to Caton's answer to the other really great question about a CRM system. One of the issues that we work with a lot of our clients on is the incentives, you're going to get the behavior that you incent in your firm. If you had a CRM and nobody used it, you must not have been incenting them to use it. And that's clearly a waste of everybody's time. So the tool is only going to be as good as the data that everybody puts in. So it's crucial that you incent everyone and measure everyone by the tools that you have and to use the system. So how do you quantify trust? We actually, with our clients, the #1 measure should be retention. Client retention should improve over time. Turnover should shrink. You can also see it in the timing of the sales cycle will shrink over time. So those are the two key things that we look at. What are the repeatable attributes? We write about some of this in our white paper, and then on an ongoing basis in Institutional Investors Edge, we're out there trying to define best practices. And it's a million little things. That's how you build a brand. So if you think of some other example, like a retail store, a grocery store even, when you walk in, if it doesn't smell right, if it doesn't look right, every single touch you have with the client gives perception. So in the content, we talk about being clear, the 3 C's, clear, concise, and consistent. The quickest way to lose trust is to give them any inconsistency. You've instantly underlined your credibility. And one way to be inconsistent is to not even have everybody on your team on the same page. We find that a lot with our clients. It's everything from even communicating about news. For instance, we just did a short research survey among asset managers of how do you communicate when a portfolio manager or analyst leaves your firm. Being consistent about that, clear and concise, who do you talk to when, how do you explain it, how do you frame it. That's something that will happen to every single firm at some point, and having a plan for it as opposed to not. So there are repeatable attributes. There's lots of little ones. The largest single one I would say is actually taking investor education and brand building seriously, which most asset managers just don't do. So if you start there, good things will only happen. The bar is still so low across our industry that there's lots of room to pay some attention here and really stand out.
Aidan, I'm going to combine 3 questions for you. As our needs change, can the system adapt? How frequently is the technology updated? And the final point is, we're always on the road. Can it be accessed from a mobile device like an iPhone?
Yep, so absolutely. So we have periodic upgrades that we provide to all our customers, and that allows us to include best practices, include new functionality, and roll it out seamlessly to all our customers. So there's always, so you're not restricted to the time or the functionality at the time when you bought a solution. It's a living and breathing solution. Regarding the other question, yes, you can absolutely use it on mobile devices, on iPhones, Android phones, on tablets, and it's your choice. You can use an app to do that. You can go natively through a browser on larger devices like tablets.
Emily asks, what was the breakdown of asset manager types surveyed for this research? For example, what was the % of hedge funds, fund of funds, private equity funds, VC funds, etc.? Amanda?
Oh, yep, that's a good question. So we went to eVestment because in our experience there, the premier, they've been provider of data, certainly one of them, they've been doing it a really long time, and they have really clean data. And we told them what we wanted to do, and they advised us that on the alternative side, the data was just not nearly as complete or as long. There were a lot of data quality issues, a lot of, as I'm sure you're aware, survivorship bias issues. And we wanted a long time period, and we wanted to include 2008. So we stuck with long only. Many people have asked us to redo this study on the alternative side, and when we can find the best, a suitable database, we will. But for this case, we chose a cross-section of long only. So we had emerging markets equity, global fixed income, high yield, and U.S. small cap.
The next question comes from Yuvika. I hope I'm pronouncing your name correctly. Are best practice customizations available for Navatar clients? Caton?
Yes, absolutely. They are baked into the product and then also included in any upgrades that we send out to the product. So you do get them, and then if there are specific areas that you're more interested in, obviously feel free to reach out to our client success team, and we'd be happy to help around those best practices too.
This is Amanda. I just want to add something to the last question about who did we survey. We do think the results are absolutely relevant to any type of asset manager, because we spoke with investors and consultants, investors that control $430 billion of capital, and consultants advising on $10.5 trillion. So these are all the same decision makers who are looking across all asset classes. And in our experience in talking to them, they don't have a completely different set of standards when they're looking at a private equity investment or a hedge fund as opposed to a long-only investment. And as I'm sure you know, increasingly some of the larger firms are offering multiple asset classes anyway. So we do think that this advice and this approach, and we have seen it, works for any type of asset manager. And we work with family offices, private equity firms, many alternative asset managers.
That's interesting. So money is money, and the way you view it is consistent, whether you're going at a hedge fund or a private equity firm or some other vehicle, right?
Yeah. You know, if you're the investor, think about certain big asset managers we all know who will go into some new area where they may have no expertise, and they suddenly raise a lot of money from their same clients. It's not because of the track record of the new product at all. It's because the fund is viewed as really smart and really good, and they just want to be in on the next thing that particular firm is doing.
We have a question from Linda. If possible, would love to see a screenshot of what data looks like to the investor data room, statements, etc. If not appropriate here, follow up. So, Caton, I don't know if you have that handy, but I know that we're going to offer sort of a free consultation or exploratory discussion for anyone interested in talking to you or Amanda, and I'll have details on that at the end of the session.
Yeah, I think that's probably something that's more appropriate for a follow-on discussion.
Okay, and we're going to tell you how to do that.
But I think
William asks.
Important to note, though, Caton, is that it's customizable, correct?
Correct. That is correct.
Right, because what's going to work, and that's why it should be done one-on-one, because what will work for one asset manager will be very different depending on asset class, type of investor, etc.
Okay, another question for you, Caton. This is again about mobile. It's from William. Does Navatar have a mobile solution? I've worked with Salesforce One, and I find it insufficient for true seamless functionality. Also, is there a way for contacts in Salesforce/Navatar to sync with Google Contacts?
Yes, so answer to the second part is yes, you can synchronize with Google Contacts also, and many of our customers are doing that. In regards to the first question, I'd love to understand kind of where specifically you need help on the mobile solution. Most of our customers are using the Salesforce One solution and seem to be quite happy with that. Many of them are also using specific solutions to synchronize, not just with mobile, but also with Outlook and and being able to do that in an effective manner. So we have customers who've been using these solutions for quite some time and successfully. I'd love to understand specific issues that you're facing, William, so we can address them. And Alan, that may be another follow-up we can do with William.
Absolutely. Denise says, how do I add Preqin as a tab to my display? Denise, I'm assuming that you're an Navatar customer and you can just call our help desk. I'll, in fact, don't bother. I'll just walk over there and talk to them about it. But there are a couple of options for bringing in the Preqin data, aren't there, Keaton?
Yes, absolutely. So it's very easy to add that tab. We can definitely help with that. It also depends on the kind of subscription that you have with Preqin. So I think based on that, we can figure out what's the best way to get you to see the Preqin data within Navatar.
Okay. Evan came in late, asks if this is going to be recorded and made available, and the answer is yes. We are recording this, and we will send out the link to the presentation on YouTube. We are coming to the end of our time. Still some questions coming in. Let me just see. I think that in the interest of time, I've saved one question for the last. This is potentially the most explosive one. So Amanda, Jeremy asks, what's the perception regarding placement agents, and would you use one if you were doing a fundraise?
There's absolutely, what you need is a sales force. So to supplement that with some outside salespeople is certainly an option that every asset manager should think about. There's lots of places where it makes sense. Like anything else, you want to be very thoughtful about anyone you're putting in front of investors, because they are your brand. Everything they do will reflect on you in the marketplace. So you want to make sure you're comfortable that they're a good representative of you, but I don't think it's a positive or a negative in and of itself. There are some. That said, certainly among the government portion of the North American institutional investment marketplace, there are some areas where there's a lot of sensitivity to that, and some of them may actually immediately eliminate you from possibility of investing in if you use them, and that's because of abuses that have happened by bad actors in that segment in the past. So if you're not focused on that space of the marketplace, it may not be relevant to you. So I hope that's a helpful answer.
I think it is, and I liked it. We have a lot of placement agent clients here at Navatar, and I find many of them, most of them, in fact, are extremely professional and just do a wonderful job for their clients. So we're out of time, but I'm sure that you're not out of questions for Amanda and Keaton. You have probably a lot of thoughts about how to get started on improving your investor relations, and both Amanda and Keaton are available to talk to you, a free consultation or exploratory discussion. It can be with either one, or we can do it with both Keaton and Amanda. Just let us know. There's the contact information. Please feel free to reach out to me, and I'll be happy to arrange the session for you. Let me thank Amanda of the Chestnut Advisory Group and Keaton of Navatar for today's webinar. And just to go back to Amanda's image, you want to be a big tree when it comes to investor relations. And thank you so much, Amanda Tepper and Keaton Congar, for helping us understand the issues involved and the technology that can be used to improve investor relations. I'm Alan Siegert of Navatar. Please don't hesitate to contact me if you would like a free exploratory session with Keaton or Amanda or both. Thank you all for joining us today.